You want to know how to make money during a recession? Then you need to listen to what Warren Buffett has to say. In this video, we'll take a look at some of his advice on how to make money during a recession and how you can use it to your advantage. Introduction. Many people are worried about the upcoming recession, but there's no need to be if you know how to make money during a recession. Warren Buffett is one of the most successful investors in the world, and he's made a fortune by investing during recessions. He explains how to use the upcoming recession in 2023 to get rich by taking advantage of opportunities that arise during periods of economic turmoil, and provides advice on how to weather the storm and come out at the top. As we all know, recessions can be tough times for businesses and individuals alike, but if you know how to play your cards right, a recession can also be a great opportunity to get rich. In this video, we'll take a look at some of his advice on how to make money during a recession and how you can use it to your advantage. Let's get right into it. Main video. 1. Focus on quality businesses. One of Warren Buffett's key pieces of advice for investing during times of economic uncertainty, such as recession or inflation, is to focus on high-quality businesses. These are companies with strong financials, competent leadership, and solid underlying business fundamentals. Such businesses are more likely to weather economic downturns and rebound when the market recovers. In his annual letter to Berkshire Hathaway shareholders in 2021, Buffett emphasized that he and his business partner, Charlie Munger, invest in stocks based on their expectations about a company's long-term performance, rather than trying to time market movements. This approach allows them to focus on the quality of the business and its ability to generate profits over the long term, rather than being swayed by short-term market fluctuations. That point is crucial. Warren said, "Charlie and I are not stock pickers. We are business pickers." By investing in high-quality businesses, investors can increase their chances of surviving and even profiting during times of economic uncertainty. While many stocks may see their prices fall during a recession, strong businesses with solid fundamentals are more likely to weather the storm and recover in the long term. This approach can help investors protect their portfolio and potentially generate long-term returns. Productive assets such as farms, real estate, and business ownership produce wealth, lots of it. Most owners of such properties will be rewarded, Buffett stated in his 2021 annual shareholders letter. 2. Diversify your portfolio. In addition to focusing on quality businesses and taking a long-term perspective, Warren Buffett also advises investors to diversify their portfolios in order to increase their chances of success during times of economic recession. Diversification helps to spread risk and minimize the impact of any one investment on your overall portfolio. By investing in a mix of asset classes and sectors, you can reduce your exposure to any one particular market or industry. In his 2021 annual letter to shareholders, Buffett indicated that diversification is an important aspect of successful investing. He stated that after investing in productive assets, an investor should practice patience among other things. All that's required is the passage of time, an inner calm, ample diversification, and a minimization of transactions and fees. To increase the likelihood of success in the face of economic downturns, it is advisable to diversify your portfolio by including a variety of strong, well-managed companies. By investing in a diverse range of businesses, you can minimize the impact of any one investment and give yourself the best chance of thriving after a recession. Buffett's advice on diversification is particularly relevant during times of economic uncertainty, when markets can be volatile and it's important to be prepared for the possibility of downturns. By diversifying your portfolio, you can reduce your risk and give yourself a better chance of success no matter what the economic environment may be. Whether you're an experienced investor or just starting out, it's important to remember the importance of diversification in building a successful investment strategy. 3. Focus on long-term potential of investments. Warren Buffett is well known for his long-term investment approach and his belief in the power of compounding returns over time. He believes that by focusing on the long-term potential of an investment, rather than trying to time the market or react to short-term fluctuations, investors can increase their chances of success. In a 2016 letter to Berkshire Hathaway shareholders, he wrote, "Investors who avoid high and unnecessary costs and simply sit for an extended period with a collection of large, conservatively financed American businesses will almost certainly do well." This advice reflects Buffett's belief that, over the long term, Businesses with strong fundamentals will tend to grow and generate returns for investors. A simple rule dictates my buying. Be fearful when others are greedy, and be greedy when others are fearful, Buffett wrote in the Times. According to Warren Buffett, the long-term value of innovative American businesses is likely to continue growing, even during times of economic crisis. However, he advises against investing in highly leveraged entities or businesses in weak competitive positions. Instead, he suggests that investors look for opportunities to buy strong companies at discounted prices during market downturns. In his view, these companies are more likely to weather any short-term pain and emerge stronger in the long run. In a New York Times opinion piece, Buffett also stated that businesses will indeed suffer earnings hiccups, as they always have. But most major companies will be setting new profit records for 5, 10, and 20 years from now. This underscores the importance of having a long-term perspective when investing, rather than getting too caught up in short-term market movements or economic events. Even during times of recession or economic uncertainty, there are always opportunities for investors who are willing to take a long-term view. One of the primary benefits of investing for the long term is the power of compounding returns. When you reinvest your earnings and hold onto your investments for an extended period, your returns can compound over time, leading to significant growth in your wealth. This is particularly relevant when it comes to beating inflation, as the long-term growth potential of your investments can help to offset the impact of rising prices over time. 4. Invest in yourself. Warren Buffett has long believed that investing in oneself is one of the best ways to succeed, especially during times of economic downturn or recession. At the 2022 Berkshire Hathaway Annual Shareholders Meeting, he stated, "The best thing you can do is to be exceptionally good at something. People are going to give you some of what they produce in exchange for what you deliver." What Buffett means by this is that unlike money, skills are inflation and recession-proof. They're something that you can always rely on, and that will continue to be valuable no matter what the economic environment may be. By investing in yourself and developing your skills, you can increase your value to others and make yourself more attractive to potential employers or clients. Buffett also noted that investing in oneself is often the best investment of all, as it is not taxed like other types of investment. The best investment by far is anything that develops yourself, and it's not taxed at all, he said. This means that any money or time you invest in yourself has the potential to pay off in the long run, without the added burden of taxes. 5. Always be prepared for the unexpected. Warren Buffett also emphasizes the importance of preparing for the unexpected during times of economic recession. In 2021, he said in an interview, "The biggest thing I learned from the pandemic was how prepared we are for emergency situations that are simply going to happen. I learned that people don't know as much as they think they know. But the biggest thing you learn is that the pandemic was bound to occur, and this isn't the worst one that's imaginable at all." Buffett's comments highlight the importance of being prepared for unexpected events and emergencies, even those that seem unlikely or remote. He points out that society has a terrible time preparing for things that are remote but are possible and will occur sooner or later. By being proactive and preparing for the unexpected, we can increase our chances of success and minimize the impact of any unforeseen events on our lives and our investments. So, there you have it, great people. Warren Buffett's advice for investing during times of inflation and economic recession is to focus on quality businesses. Take a long-term perspective, diversify your portfolio, invest in yourself, and lastly, to be prepared for the unexpected. By following these guidelines and avoiding high fees and unnecessary costs, you can increase your chances of beating inflation and getting rich over the long run. Remember, the key to success in investing is to do your own research and understand the businesses you're investing in. Don't rely on technical analysis or try to time the market. Instead, focus on the long-term potential of your investments and stay patient through any market fluctuations. If you're looking for more tips on how to profit during times of inflation, be sure to check out our other videos on the topic. And if you enjoyed this video, be sure to give it a thumbs up and subscribe to our channel for more great content.